If you're a high income earner, you're probably paying more in taxes than you need to. And the crazy part is, most of the overpaying happens by accident. The tax code gets more complicated the more you earn, and that means mistakes get more expensive too. Most high earners unintentionally sabotage themselves because they don't coordinate income, deductions, and their investments. They wait until tax season instead of planning all year. They assume their CPA is doing tax planning already when most CPAs really just do the tax filing. Or they simply don't understand how the IRS penalizes certain kinds of income. These aren't bad decisions, they're just blind spots. But blind spots can cost money. Let me give you the 3 big mistakes I've seen over and over with high income clients. The first, ignoring phase outs. At high income levels, deductions and credits disappear. Child tax credit, gone. IRA deductions, gone. Even certain itemized deductions shrink. People continue contributing the same way without realizing they're getting zero benefit. 2, taking income at the wrong time. High earners often trigger tax bills by taking bonuses, equity compensation, capital gains, or business income all in the same year. Stacking income balloons your tax bracket. Spreading it out or offsetting it can save thousands. And then 3, not using tax efficient investing. Tax inefficient assets in taxable accounts quietly eat away at returns. Interest income, actively traded funds, and short-term gains get taxed at the highest rates. Put the wrong investments in the wrong account, and it's like volunteering to pay extra. Here's a real example we see consistently. A high income earner maximizes their 401k and then puts everything into a taxable brokerage account filled with active funds while not utilizing all options at their disposal. They're paying 32, even 37% on gains they could have sheltered, deferred, or even offset. We simply shifted the location of their investments, didn't change a single holding, and it cut their tax bill dramatically. They didn't need a new strategy, they just needed a smarter structure. So here's the truth. The more you earn, the easier it is to accidentally sabotage your taxes. But with the right planning, you can legally and responsibly keep more of what you work so hard to earn. As an advisor, I do work closely with tax professionals to make sure everything and everyone are on the same page to maximize your benefits. I would encourage you to meet with your tax professional to go over some tax planning options, as 90% of tax planning happens proactively, not reactively. If you want to see where you could add some tax efficiencies in your portfolio, let's talk. I'm happy to meet with you and your tax professional to save you some tax dollars.